Long-standing housing policy, mortgage interest deduction, FHA, and discussion of Fannie and Freddie. Let's start from the bottom. Fannie and Freddie. Mere mention of that should raise at least half of the audience here your blood pressure. Fannie and Freddie has been soaking up taxpayers' money. What is the deal with Fannie and Freddie, and what should be in the future? First, in the future, 5 years from now, 10 years from now, Fannie and Freddie will no longer exist. However, my best guess is that the infrastructure of Fannie and Freddie will exist under a different name. Fannie and Freddie, when looked at long history, what was their job? Consider your parents, when they bought their home, or you bought their home back in the 1980s, 1970s, whatnot. And you said Fannie and Freddie back in 1970s and 1980s. And you would say, who? Because Fannie and Freddie at that time, they were in existence, but they played a very quiet background role. What was their background role? They could borrow money cheaply. Why? Because there was an implied government guarantee, meaning that they can borrow money cheaply. If you wanted to borrow, you have to pay high interest rate because you don't have government backing. Fannie and Freddie had the government, implied government backing, so they can borrow money cheaply, and you pass on the low borrowing costs over to the consumers. So even though during that time interest rate may have been 10%, without Fannie and Freddie it could have been 11%. So Fannie and Freddie were playing background role, quiet background role. Very simple, borrow money cheaply, pass on that cost, borrowing costs over to the consumers. From the 1990s, Fannie and Freddie somehow believed they were purely private companies. Even though they had the government backing, they just believed that they were purely private companies, so they said, well, you know what, as a purely private companies, we can do whatever we want. And let's create this hedge fund, and let's battle the market. And they created a hedge fund, or what economists would call the investment portfolio, and it did well during the boom years. And during the boom year, huge profit, share with managers, share with the shareholders, all good and fine. But they had the government backing behind the scene. Housing market bust. What do you know? Taxpayers are on the hook. So you have a system where you have private profits, but taxpayer loss. That just cannot continue. I mean, that just violates any sense of fairness. So that will not continue. Fannie and Freddie was taken over by the government a couple of years ago. So in essence, today they are nationalized. They are not profit maximizing or a private company. They are essentially a nationalized company. What will happen to the future of Fannie and Freddie? And what is the role of the private market? NAR set up a special committee to review all the options. And as a staff member, I provide recommendation or I provide information, but it's really the realtors who decide as to the direction. And I found that realtors always decide the right way. And what they decided is the following. And this is what we discussed with the Treasury and HUD and other government officials. First, the report last Friday came out on the future direction of the Fannie and Freddie by the Obama administration. And for anyone, and I hope you were not one of those, flip those pages as to what the future of, it looks like a high school term paper. In essence, just very generic thing and say, well, option 1, option 2, option 3. I think it was purposely made it out to be a high school term paper because they did not want to go into any details because laying out the details means possibly more criticism or actually the administration really don't know what to do at the moment and they need to buy time. And way to buy time is you publish something very broad, general, and later over further discussion trying to nail down the details. What NAR is recommended, and I believe this is what it will be adopted at the end, and I hope it's adopted at the end, is that for very simple mortgages, 30-year fixed mortgages, there's not that much innovation that needs to be done. You have the standard underwriting standards. People meet their underwriting standards. Your income is enough to get that mortgage, 30-year mix. We want to have government backing on those mortgages because without government backing, consumers will be paying higher mortgage rates. Furthermore, without government backing, it would be something like the jumbo mortgages or commercial real estate mortgages or the construction mortgages, which means sometimes it's available, sometimes it's not available. We don't want to have that for American consumers who want to buy a home. We want to assure that there's always steady flow of mortgages. So for very simple mortgages, have government backing, but because it's a very simple business model, there's no need for any profit situation, just a simple government charter entity that just pass on low borrowing costs over to the consumer, that's it. We want private market to participate and innovate in less traditional mortgages in other areas. However they decide to come up with mortgages, we want private market to participate in coming up with the creative ideas. But I don't see any potential innovation in the 30-year mortgages. So for that, if we were to just say pure privatization, then we run the risk. Sometimes mortgages are available, sometimes not. And also consumers will be paying higher mortgage rates. Today, 5% today, but without Fannie and Freddie, consumers will be paying 6% mortgages. And the margin is bank profit. Banks will be making profit of that. And furthermore, because of the bank consolidation that has occurred in the past decade, huge bank consolidation, essentially 4 banks originating about 80% of the mortgages, they are huge, way, way too big to fail. And believe me, one of these private banks was to go wobbly, taxpayers will be on the hook. So somehow the idea that you privatize and taxpayers will be off the hook, that doesn't follow history. History say that if it's way, way too big to fail, taxpayers will be stepping in. So given that taxpayers will be stepping in, why don't we make it simple? Just a simple basic mortgage, government runs that, very little, and just pass on low borrowing costs. Anything else, let the private market do their innovation and make them take risks. But that risk taking is more limited because you have the most consumers getting that 30-year or 15-year mortgage. So outside of that box would be more limited. So any risk taking there would be manageable in terms of if companies were failing in that, and certainly they can absorb those losses or they can absorb the pain. It's not that too big to fail scenario situation. So that's what NAR is recommending, and I think that's what will be adopted at the end. FHA situation is that FHA is also, as you know, government-backed mortgage, and for the 70 or 80 years of its existence, it never required a single dime of taxpayers' money. It was always self-funding. It was able to self-fund, meaning that you collect premiums, HUD collects premiums, there's mortgage default, they use the premiums to pay off. They did an audit, a financial audit, with a strong stress test to see what can they absorb if this negative economic events to occur. And it showed that, yes, they have enough cash reserves. So it looks like there was some fear that maybe FHA also would need some taxpayer bailout, just as Fannie and Freddie did. But it looks like FHA were not needed. They were able to undergo that stress test, and they passed that test. Mortgage interest deduction is another policy issue. Deficit Commission report came out, I think, in December to say we have this huge budget deficit, unsustainable. We need to reduce budget deficit, and way to reduce budget deficit, everything should be on the table, including getting rid of mortgage interest deduction. That way government collect more. First, mortgage interest deduction has been in place for 100 years. How is it possible that for 100 years mortgage interest deduction has been in place, but your budget deficit suddenly began to occur recently and say mortgage interest deduction is part of the plan? Well, no, mortgage interest deduction is not part of this large budget deficit because for 100 years it was able to, it was always there. And because it is what I consider to be a settled issue, if this was a Supreme Court or something that has been in place for so long, it's an essentially settled issue. Of course, that can always change, the lawmakers can change. But any limiting of the mortgage interest deduction is essentially a tax increase. So people paying higher taxes. And even for people without mortgages and people who don't take mortgage interest deduction in their tax forms, you are impacted. Why? Mortgage interest deduction goes down, there will be fewer home buyers, price of asset that tax benefit receive will fall. So even those people who own their home free and clear, their home values will fall. So it is a wealth disruption for a vast number of population in the U.S. And we have been making the argument. So deficit commission came out to say everything is on the table. President Obama came out with his budget Monday, and on his budget he says that we will ignore the deficit commission, and we will only try to tweak the mortgage interest deduction on the very high income individuals. But this is nothing new, because the President has submitted a similar proposal past 2 years, so for the third year submitting it, lawmakers never adopted that. So it was a proposal, but the lawmakers never adopted that portion of the mortgage interest deduction, and I don't believe lawmakers will touch that also this time. So it's always a proposal, but it's something that Congress never adopts, and we want to assure, NAR always has a good conversation with members of Congress. So again, mortgage interest deduction, I talk with many economists. Most economists would say get rid of it. It's something that is making the economy less efficient. They make all the arguments about it, but my counter argument is it's something that has been in place for 100 years, and you take it away, you are changing the rules in the middle of the game, and it's a wealth destruction for a vast number of individuals. Now, hypothetically, we started from a clean slate. So there is no mortgage interest deduction. You move into one planet, you are beginning to start a new country with new tax code. Maybe, if it's completely clean slate, maybe mortgage interest deduction requires a conversation. But we are not starting from clean slate. We are starting from a situation where we have mortgage interest deduction. People are accustomed to what people expected, and it's changing the rules in the middle of the game, and this is something that naturally the citizens will be fighting for. We asked our members, because as you know, you get the Realtor magazine, and in the Realtor magazine there are some stories about it, and there is an NAR president making comments about mortgage interest deduction. I make some comments about mortgage interest deduction. And then we get emails and sometimes phone calls from members to say NAR is taking the wrong position. It's time to sacrifice, because everyone has to sacrifice in this high budget deficit. It's a shared sacrifice for everyone. So we decided to take a poll of Realtor members to say, okay, we see these emails, so maybe are they representative of all Realtors or not? So we took a random sample of Realtors to see what the random sample of Realtors are saying. And what they are saying, in essence, maybe it's hard to read here, is that by 80 to 20, 80% say protect mortgage interest deduction no matter what. 20% is saying maybe we need to give in for shared sacrifice. So by 80 to 20, any large organization, there will be some division of opinions, but by 80 to 20, the Realtors have said protect mortgage interest deduction no matter what. How I interpret it is the following. Some people believe, well, you do a shared sacrifice, but once you do that, believe me, they will be coming after for more in the future years. So if you give in 1 inch, they will come for more and more and more. So whatever they qualify for, income limitation or whatever amount, they will come for more. The other argument is, this is more from the southern states. We get questions from Alabama, Mississippi, Georgia to say, well, the deficit commission said if you get rid of the mortgage interest deduction, tax rates will be lower. So if you remove mortgage interest deduction, everybody's income tax rate will be lower. Isn't this better off for America? And the reality is, well, theoretically, maybe that is better off. But that's the theoretical world. The real world is you remove mortgage interest deduction, tax rate goes down, and say, yeah, this is good. But believe me, in the future, tax rate will go up. At the same time, you lost the mortgage interest deduction. So there is many ways to view why Realtors are answering this way, but by 80 to 20, Realtors have responded, and the NAR leadership is in essence representing the broad Realtor views. And I'm sure some of you disagree with this position, and it's just natural in any large organization. Let me also mention about the importance of home ownership mortgage interest deduction.